Hello, how are you doing? I'm sure you are doing good. Today, I want us to discuss about a very important topic, which is how to become a successful mobile money agent. And so, you may be an agent or probably a potential mobile money agent. What should you do? What can you do so that you become a successful agent over there? The shop might be for you, or it might be for somebody for which you are the operator over there. You are not the owner per se. But then, how can you still be a successful person or a successful business personnel or an agent? And so, under this topic, I want us to discuss about these things. The first thing that we're going to talk about is um definitions and acronyms that are very important in the field. And also we also talk about the structure of a typical mobile money service. We will also proceed to key competencies of a successful mobile money service. And lastly, we will discuss about key decisions facing mobile money operators and regulators. I'm sure you are going to be blessed at the end of this discussion or presentation. Let's begin with the acronyms. B to B, B to letter B means business to business. You can list it down, all right. A to A letter 2, A to A means agent to agent. CFT, CFT means combating financing of terrorism. G money means electronic money. G to P means government to person. KYC. So in the field of mobile money operations, you may be hearing KYC. KYC means know your customer. MNO, it means mobile network operator. M money means mobile money. AML means anti-money laundering. M wallet means mobile wallet. P to P, P to P, P letter 2, P means person to person. Certain definitions that I want you to know as far as the operation mobile money is concerned, you being an agent. And so when I mention the word agent, what does it imply? What is the meaning? An agent is a person or business that is contracted to facilitate transactions for users. Okay, so that is what an agent does. So the most important of these are cash in and cash out. So an agent is there to do what we call cash in and cash out. What is the meaning of the term cash in and cash out? And the meaning are loading value into the mobile money system is what we call cash in. Okay, you load money into the mobile money system. So a customer may come to your shop and then he or she may require you to load money into his account. Doing that is what we call cash in. Again, a customer may also come for you to convert his cash in amount into physical cash, and we call that cash out. In many instances, agents register a new customer too. Okay, you can also register a new customer to have mobile money account. What is anti-money laundering? They are a set of rules typically issued by central banks. Okay, and here the central bank can be the Bank of Ghana or Bank of Nigeria, Bank of Togo. Okay, the central bank that attempt to prevent and detect the use of financial services for money laundering or to finance terrorism. The global standard setter for these rules in the financial action, you can have financial action task force. Okay, they are actually inculcated in the central bank. And so the cash in, as I said earlier, is the process by which a customer credits his account with cash. Okay, and you, an agent, has to do this for him. And so sometimes they may come and tell you that I'm doing deposit. Okay, meaning you are loading the amount into his account or into the mobile money system. We also have cash out, okay, as I said earlier, is the process by which a customer deduct cash from his mobile money account. Okay, this is usually via an agent who gives the customer cash in exchange for a transfer from the customer's mobile money account. Okay, you give the customer cash, physical cash, and then you receive the electronic cash from the customer. What's the meaning of an electronic money or electronic cash? The electronic money here means a stored value or prepaid product in which a record of the funds or value available to the consumer for multi-purpose use is stored on an electronic device in the consumer's possession. Okay, it's very simple. Okay, this definition includes both prepaid cards. Okay, it includes a prepaid cards, sometimes called an electronic purse, and prepaid software product that use computer networks, sometimes called digital cash. So, as an agent, if you encounter the question, what is a fruit? Okay, fruit, F-L-O-A-T, fruit is the balance of e-money, physical cash, or money in a bank account that an agent can immediately access to meet customer demands to purchase, cash in, or sell. That is cash out, electronic money. Okay, and so float includes your e-cash as an agent, and your physical cash or any money that you have at the bank which you can use to meet the demands of customer. Okay, we also have this term, know your customer, KYC. What is the meaning? They are rules related to anti-money laundering which require providers to carry out procedures to identify a customer. Okay, liquidity, the ability of an agent to meet customers' demand to purchase cash in or sell cash out money. Okay, that ability to meet customer demand is called liquidity. And so if the business is liquid, that is where any transaction that customers will bring, he or she will be able to meet that demand. Sometimes a customer may come to a shop and then an agent may tell the customer that there is not enough funds here, I don't have enough funds to carry out this transaction. Then you are not liquid. The liquidity I'm talking about over here is the ability for you to meet the demands of customers. Okay, so here what an agent you have to do here is that you have to always be in position to be liquid. So at the end of this lecture, I'm going to I'll tell you how you can be liquid. Okay, no matter the capital that you are using, you can still be liquid to meet the customer's demand. And rest assured, you will know before I finish this presentation. When customers access a bank account via a mobile phone, sometimes they are able to initiate transactions, and this is called mobile banking. We have mobile money or M-money, a service in which the mobile phone is used to access financial services. So, in the mobile money transaction that I'm talking about over here, we deal with mobile, we deal with phone. Okay, mobile phone, not computers or something else. So be careful, you being an agent, what you are doing there, you are dealing with mobile phone and nothing else. Be very careful, because there are fraudsters around. They will come convincing you to do a whole lot of things for them. At the end, before you realize, they have deceived you and they have fraud you. Be very careful. Mobile money ecosystem. What is the meaning? The term mobile money ecosystem is a network of organizations and individuals that must be in place for money services to take root, proliferate, and scale up. They are characterized by interdependence and coordination among any number of actors such as MNOs, banks, etc., airtime service agent, retailers, utility companies, employers, regulators, for international financial institutions and donors, and even civil society organizations. Okay, so when I say mobile money ecosystem, it means the agents coming together, okay, or the agents coming together with employers, with regulators, okay, they all come together in that environment. We call it mobile money ecosystem. We also have mobile payment. Mobile payment is a movement of value that is made from a mobile wallet across accrues to a mobile wallet and is initiated using mobile phone. Okay, sometimes the term mobile payment is used to describe only transfers to pay for goods or services, either at the point of sale or remotely, or bill payment. Mobile money provider. Mobile money provider, another term. It means any institution that plays the lead role in a mobile money development or deployment. Okay, that's the mobile money provider. In this report, mobile money provider refers to MNO. Mobile money providers refer to MNO, banks, third parties that provide mobile money services. Mobile money transfer. Okay, what the meaning of mobile money transfer is a movement of value that is made from a mobile wallet accrues to a mobile wallet and is initiated using a mobile phone. Okay, so all what we are talking about over here is basically about phone, okay, and not computers or something else. So you have to be very careful. We also move on to this particular term called underbanked. Customers who may have access to basic transactions accounts offered by former financial institutions but still have financial needs that are unmet or not appropriately met. For example, they may not be able to send money safely or affordably. Okay, so they what we call underbanked. The next thing that we are going to discuss over here, be careful and listen to it critically. I want you to understand the content of the studies that we are going through. The next thing is structure of a typical mobile money service. Okay, so a typical mobile money service, what is the structure? Okay, you have to know. It includes the owner. Okay, so who is the owner in this case? Mobile money services are typically owned and operated by either a mobile network operator or financial institution. Okay, typically a bank. So each type of organization has its pros and cons, which we will discuss in our detail in our discussion. It also include bank account operator. Okay, bank account operator is there. The next thing is service offered. Okay, the structure include the service that mobile money agent or operation is offering. Okay, the service include peer-to-peer money transfers, P2P. Okay, remittances, domestic and international. Okay, bill payment, receipt, salary, disbursement, receipts, retail payment, and money storage or savings. That is the services of a mobile money agent. We also have cash in and cash out. Okay, it's also a service offered by a mobile money agent. So the structure include that. It also includes service delivery method. Okay, mobile money structure include the service, the delivery service method. Okay, and this we're going to discuss a situation that mobile money services are typically delivered in one of two ways. Okay, either directly through a customer's mobile phone or over the counter. Okay, so services delivered directly through a customer's phone require the customer to put cash into their mobile account, convert it into electronic form, which they can then use to make payment or transfer directly through their phone. Service delivered over the counter here require the customer to physically visit a representative of mobile money operator where the customer provides cash for transactions to the representative, who then uses his or her own mobile phone and mobile money account to effect the transaction and take the cash. Many services offer customers both actions. Okay, so be careful before you effect any transaction in this form. You have to see money in the hand of the customer. One, and again, you also have to take the money and check the quality of the money. The quality over here, I'm talking about the money not being fake. Okay, under no circumstance that you send money as an agent in any way without you seeing the money and taking the money and check the quality of it. Be very careful. Customers may come, you might not know the good ones and the bad ones. Be very careful. And so, without whether the person is a president, is wherever he is, take the money, check the quality before you effect any operation. The next thing under our discussion here is distribution network. Okay, the structure includes distribution network. So mobile money operators typically leverage an agent network to distribute their services to customers. Agents are typically either a retail locations directly owned by the operator or an existing merchant, generally small independent stores or sometimes chains which have been signed up by the operator, or a mix of both. Okay, to reach scale, however, most mobile money services must eventually leverage outside merchants. That's very, very necessary. So we also have the customer served. Okay, and we also have fee structure. Fee structure. Let me take you through the fee structure over here. There are many different fee structures employed by mobile money services. Okay, you might not know. However, they are typically all one: transaction based. Fees charged on a per transaction basis. Okay, as soon as the transaction is carried out, the fees are charged. We also have fee charged to customers. Here, transactions can include both transfers to others, P2P transfers, cash in, cash out. Services typically set fees in order to encourage different behaviors they believe will be beneficial to their service. That is charging higher fees for cash out versus cash in to encourage customers to put money into the system. Are we getting? So charging higher fees to individuals who are not registered users to encourage them to become customers. That's very simple. That's the meaning of that. We will also talk about key competencies of a successful mobile money services. Here we have some competencies that can be developed, you being as an agent, and the ones which we will also discuss over here. The ones that you can develop are as follows. Listen to me very carefully. They include these ones that I'm going to talk about. We have safekeeping of customer funds. You have to develop this. You have to keep the funds of customers safely. Be very careful on this. A customer may come to your shop, do a transaction, either cash in or cash or whatever. You have to take records of the person's phone number, okay, and make sure that it is accurate, so that in case the customer returns back that maybe the person that he sent the money to is not the person that he was sending the money to. I mean, he the customer made a mistake, and so he wants to effect change. You having the correct values or numbers over there, you will be able to call MTN office or Airtel Go office or the office in charge for them to effect reversal quickly, okay, so that you will not be in a big problem. We also have facilitating cash in or cash out. Okay, you have to facilitate that. How do you do this? It refers to the ability of customers to easily put funds into mobile money services. Okay, here you convert their physical cash into electronic funds, and to withdraw funds from the service, convert the electronic funds into physical cash at a location and at a time convenient to them. Okay, you have to be very careful and then do this critically. So why is this critical? These are essential components of a mobile money service, much more so than might be expected. Okay, these small things that you think they are very very important, because only a small percentage of customers use their account as savings vehicles. And again, much of the economy in which customers exist is still a cash economy, requiring them to have physical access to funds to transact. Okay, and so in addition, research has shown that usage of mobile money services drops if they are not cash in or cash out location in close physical proximity to customers, and if agents are not accessible at times when customers are free to visit them. So it's very very important over here. We also have what we call liquidity management. You have to develop this one too, okay, as an agent. Liquidity management refers to ensuring that the entities, that's the agents responsible for handling cash in or cash out, have adequate physical cash and electronic funds. Okay, you need to have them to facilitate the customer transactions they need to perform. Okay, that is where I told you that I'm going to show you how you can keep enough funds, either electronic funds or physical cash, whether in this case whether your capital is enough or not. How do you do this? You have to build a proper ecosystem in your area. You have to talk to your co-agent, your co people in the same arena with you in the area, and then be friendly with them with vigilant eye and ears. Okay, don't do this foolishly. And doing this, in time that you need cash, you can call them, okay, and then they may help you. Okay, I think Vodafone has this. Vodafone Cash has this group, WhatsApp group, that if an agent does not have enough to transact to customer, he just call them, or put his merchant line in the page, and then they just send you the amount that you want for you to use it for transaction. Okay, the Vodafone has this. In a case where they don't have, you the agent has to make it happen. Connect with those at your area, be friendly with them. Those mobile money agents in your area like you are not enemies to you, but rather they are your competitors. Okay, they test your ability to regulate the customers. You also have to mitigate fraud. Be very careful in mitigating fraud. Okay, fraud can refer to fraud by agent, taking cash in or money meant for transactions but remitting it to their own personal account, or by merchants overcharging for transaction or not delivering services promised. Okay, so you an agent can be a fraudster. Okay, where a customer come to your shop and then you charge him abnormally. Okay, it's a problem. And then we can also have a problem of the customers also coming to deceive you as an agent. Be careful with both. So why is this critical? Aside from the direct loss to those customers affected, it's also part of building and maintaining trust among the broader customer base. Fraud plays directly into the pre-existing mistrust of financial services noted earlier, and because as incidents of fraud have been significant issues in many mobile money deployment. Thus, even a limited number of incidents of fraud can have a ripple effect on imparting customers trust in the service and their willingness to use. Okay, so be very careful with this. It's not something very simple that you have to joke about. You also develop this ensuring adequate agent economics. Okay, develop this. How do you develop this? Agent economics refers to the profit which agents can generate from their mobile money business. Okay, this is critical because ensuring that agents have adequate economies is critical, as they are generally running an existing business. Okay, and might also have other agents like business airtime top up. So if they don't see compelling enough economics from the mobile money business, they might either de-emphasize it in their day-to-day operations, okay, or discount it altogether. So ensuring adequate economy is not trivial, as agents must take on significant working capital requirement in the physical cash and fruit required to be held for transactions, and also it can check for customer numbers and transaction volumes to scale. Be very careful on this one too. You also have to develop scaling and agent network sustainability. Here, scaling an agent network refers to both the rate at which new agents are added to the network and where those agents are located. The issue of sustainability arises because there can be tension between scaling the agent network more rapidly and more moderate growth. In addition, an agent attribute or attrition rate can be relatively high initially, has early cohort of agents often won't have a good sense essence for whether the business will be a good fit for them or how to succeed at the business, and as it takes time for the economies to wrap as described above. Okay, we also have effect customer support. Okay, we also have to develop this. Here, customer support refers to the options available to help customers with questions about the service, problems with transactions, or other concerns. Okay, you have to develop this. This could include interaction via phone. Okay, you can talk to them on phone and SMS or in person. Okay, you can do this, and you can also do many things. Okay, just be wise and critical in your area. So the key decisions facing mobile money operators and regulators, let me glance to you, lead you through this shortly. You have the regulator structure. Okay, the regulator structure refers to the regulatory regimen established by government regulators. Okay, central bank for mobile money services. This is key as it establishes the type of entities which can own or operate mobile money service, the type of entities which can provide various related services, and also know your customer rules must be implemented, and again the degree to which there is a legal certainty about what mobile money operators can and can't. Okay, main alternatives. Here we have overall framework, the overall regulatory structure which defines the boundaries within which mobile money operations must operate. Is that we have no specific regulations, and also test and learn approach. The no specific regulations adopt no new regulations specific to mobile money services. Okay, as the name implies, no specific regulations, and mobile money operators must find a way to operate such system within the existing regiment. And then we have test and learn approach. Here, regulators create an initial regulatory framework allowing mobile money operators to experiment while waiting to create more specific regulations until they can observe live service deployment. Okay, and I think this can help you. As I said earlier, my name is Quarmson Jonathan, and have a nice day. Thank you.